Welcome to Trader TV, your insight into trading for professional investors. I'm Dan Barnes. FX traders can get better execution if they can access a more diverse flow of liquidity. To understand how, I'm speaking with Artur Deliergiev, Quantitative Trading Manager at CMC. Artur, welcome to the show.
Thank you.
What are the challenges that your clients face, and then what are the challenges that you face as a liquidity provider in trying to access less homogeneous FX trading flows?
To run their strategy, we're obviously trying to look for diversity in terms of liquidity, so they can be assured that during different market conditions, they'll have a good set of liquidity providers they can externalize flow to. As a liquidity provider, the challenges we face is effectively monetization of the risk we inherit on our books. So questions we would have to normally answer is, do we have enough capital to run a certain amount of risk? Do we have a strategy and alpha to be able to monetize that type of risk? And if not, then who do we externalize that risk to? Do we face tier 1 banks? Do we face non-banks? Or do we go to our primary venues? The challenges with externalizing flow is minimizing the market impact and information leakage, because you want to remain invisible when you trade in the market. Those questions come with quite a lot of data crunching. So at CMC, we have a team of quant traders, quants, and data scientists working on those challenges, problems on a daily basis.
Can a liquidity provider actually help then in accessing different types of liquidity, more diverse flows?
Certainly, as long as the liquidity provider actually publishes the unique type of liquidity. There's quite a few players offering recycled type of liquidity, so not being genuine liquidity. They would take liquidity from tier 1 bank or on LPB and effectively repackage it and sell it to their clients. The problem with that is when client is looking to minimize the cost of execution and optimize their aggregate effectively, where they're aggregating the prices from multiple liquidity providers. Not having a diverse set of LPs could translate to unpredictable costs in volatile markets. So what you're effectively looking for is diversity. We believe at CMC Markets Connect, we can offer diverse pricing to our clients, and that is built upon the inventory from our retail client base.
What appetite do you think there is amongst institutional firms for accessing retail liquidity?
In 2020, we've done a survey reaching out to our institutional traders to inquire if they believe that adding retail flow into the price construction for the institutional investors would add value, and over 80% responded positively, thinking that it would generate a value add. And that's why we believe it positions CMC Markets Connect uniquely when it comes to providing liquidity in the institutional space.
Are there any other elements that you think institutional traders and investors need to be considering in the FX space which we haven't covered?
Initially, when you're on board with specific LP, things you can see straight away is obviously the prices they're sending you, the spreads they're quoting. But in terms of longevity of that relationship, you start measuring cost of rejection if LP rejects your trade, cost of a market impact effectively. If I'm trading with LPA and their market impact is high, but I've also got other LPs in the pool, they're going to start treating my flow differently because it's going to be less profitable type of flow for them because we're seeing high market impact because I'm effectively leaking information through one of my LPs. So there's a big amount of data you need to consider to make the decision in terms of, yes, this LP is genuine liquidity, it's not recycled liquidity.
That's really interesting. So tell me, what has CMC developed?
We've been in the institutional space for a number of years now, but as we're now trying to grow, we've rebranded as CMC Markets Connect, responsible purely for institutional side of the business, alongside of revamping our trading stack and covering all the basics like moving into OT4, getting the cross connects. We've also partnered externally, whereby we're utilizing well-commoditized components within the industry. We've got a big development team in-house, which we utilize for quite a lot of our stuff. But things like, for example, SOR doesn't really make sense for us to spend the next 5 years developing. So we partner with someone to get best in breed in the industry, which allows us to optimize in areas where there's no point of us spending our own development efforts.
And then how can institutional investors engage with you so that they can access better liquidity today?
We've already onboarded with a number of connectivity providers, as well as multi-dealer platforms. We are currently onboarding with a number of ECNs, so you're going to be able to face or access our liquidity in a semi-disclosed or non-disclosed anonymous fashion via the traditional ECNs basically. And you can also access via direct API.
I'd like to thank Artur for his insights today, and of course you for watching. To catch up on our other shows or to subscribe to our newsletter, go to tradingtv.net.